It's Friday here at 8:31 a.m. Pacific Daylight Time. It's the 10th day of July 2026, and this is episode 1349 of Bitcoin and with me, your host, David Bennett, bringing you all the news that you can use about Bitcoin and macro from around the world. And Ben Bernake is going to start us off. You thought he was gone. He was the old Fed chairman for the U.S. Federal Reserve, but he's back. And we're going to start there. But before I do, we got some other headlines here going on. New Hampshire and the $100 million Bitcoin-backed bond we're going to talk about. Japan's prime minister just seems to keep opening her mouth and getting Japan in more and more trouble. We'll see what she's up to today. And then Mara... they are working a deal, yet another deal in West Texas to acquire a, massive amount of land for Bitcoin mining. And obviously, along with Bitcoin mining, artificial intelligence. That's Mara's one of the people that are playing both sides of the fence, which is exactly what Bitcoin miners should be doing. Is finding new revenue streams that leverage the fact that they've got more power than any other people are able to contract for. And that's a deal. I still don't think people properly appreciate how much experience Bitcoin mining companies have in the power requisition industry, being able to get contracts for cheap power over very long periods of time and create structures where it's not going to cripple the grid if they do so, and all kinds of... Nobody seems to appreciate just how long these guys have been doing this. And it's the Bitcoiners that have been put into place to be able to do all of the stuff that AI needs. It's weird to watch, but we are watching it in real time. Then in the second part of the show, EU Parliament has passed chat control. Yeah, they did it in a really nefarious way. And back to Japan, where Bitcoin-backed loans are coming up. And then we're going to end up with OpenAI and the release of ChatGPT 5.6 Sol and see what that thing is doing. I've already had problems with it, so we'll find out what these guys have to say. But first, Ben Bernake. You really probably didn't think that you'd hear very much from him again, but lo and behold, Ben's back. Yes, he's back. This time with Anthropic. Yeah, you heard that right. Anthropic appoints former Fed chair Ben Bernake to its independent trust. CNBC.com has it. Anthropic on Thursday announced that it has appointed Ben Bernake, the former chair of the Federal Reserve, to its long-term benefit trust, the company's independent governance structure that advises the company and appoints board members. Bernake served as Federal Reserve Chairman from 2006 to 2014, having succeeded the late Alan Greenspan. And not long after taking office, he found himself in the middle of the worst economic collapse since the Great Depression when the financial crisis hit in 2008. And part of his legacy was taking the Fed into the realm of zero interest rates and, of course, quantitative easing. After leaving the Fed, he served in several capacities at organizations including the Brookings Institution, Citadel, and PIMCO. And in 2022, he was awarded the Nobel Prize in Economics for research on Great Depression causes in his role as a member of Anthropic's Long-Term Benefits Trust. Bernake will help the company understand how AI is changing the economy, according to a blog post. Quote, Anthropic has created a unique governance structure to try to ensure that the long-run benefits of AI for humanity far outweigh the risks, Bernake said in a statement. Quote, I am honored. Oh, so honored to have this opportunity, and I will try to contribute in any way I can to this critical mission. End quote. And then they talk about when Anthropic was founded and blah, blah, blah. But it turns out that Bernake is the fourth member of Anthropic's long-term benefit trust. He joins Neil Buddy Shah, who is the CEO of Clinton Health Access Initiative. So he's one of the Clintonistas. I hope nobody on the board dies. I'm just saying. He also joins Richard Fontaine, a national security expert, and Mariano Florentino Queller, I can't pronounce it, who is an international affairs expert who the company appointed back in January. Members of the trust do not hold any equity in Anthropic. They are paid exclusively for their time and service, according to Anthropic, and existing trustees select new members in consultation with the company. So, Ben Bernake, sitting on the trust board for Anthropic to figure out how AI is going to impact the economy. And in a way, it makes sense. It's just, why Ben? Yeah, he's so the guy clearly is well connected, but it can be argued that a lot of the problems that we have today were initiated by Ben Bernake due to the 2008 economic collapse around the world, in which they basically printed money. That's how they got out of it. Now, there was some finagling about, how Bear Stearns was going to collapse and what other companies that were scheduled for or had inevitable bankruptcies that were going to be bought out by larger banks. And the whole thing was written up in a book that made Ben Bernake and the other people of the Fed and the people of the Treasury look like they were selfless heroes. And I'm here to tell you that they weren't. And I can't remember the name of the book, but some people close to me have read that book. And after reading that book, you cannot say a bad word around them about Ben Bernake without them shedding fucking tears and shit. It's amazing to me how easily people can be programmed to become the defense of people that basically stood to destroy the world's economy. You should have just let it fail. Because by kicking that can down the road, they basically put us in a position where the potential energy of even worse collapses in the future grew exponentially. If they had just let it collapse in 2008, would it have hurt? Of course it would have hurt. It would have absolutely hurt. But now, the damage basically being kind of like wadded up and kicked down the road a few 100,000 miles is just going to make, when it finally does collapse, way more intense, way more painful, and extremely destructive. And not that it wouldn't have been destructive before, but now it's even going to be worse. And that's what I've got a problem with. Why did Ben and the other people around him decide that kicking this can down the road was more important than just letting the entire global economic system reset itself? Because that's what nature wants to do. And people keep thinking, oh, well, the economy is man-made. No, it's not. It's not. And the reason it's not is that humans, who are the progenitors of these kinds of economics, there's all kinds of economics in nature. There's water cycles and nitrogen cycles. There's all kinds of shit. But money cycles, that's the economy that we generally talk about when we talk about legacy economic stuff, right? That's Ben Bernake. That whole thing was created by a natural function of the planet, humans. We're not aliens. We're not machines. We're not all that different than other natural phenomenon that you will find out in nature, because we are all governed by the same natural rules of the universe. So whatever it is that comes out of the mind of men is going to have the hallmarks of nature. And the economy that we've developed, as crap, as potentially evil as it's become, is still a natural function of the universe. And a lot of times, things just have to fucking collapse and restart. It happens in forests. It happens with deserts. It happens in the Great Plains. It happens with ecologies all over the place. And it doesn't necessarily have to be because of climate change, right? It just happens. There's a whole forest in Oregon that's basically being eaten by a mushroom. Right now, the organism in general dry weight, if you were to do the math on this organism in Oregon, it's the honey mushroom. Can't remember its Latin name. It doesn't matter. It's a yellow honey mushroom. I hear they're delicious, by the way, but they kill trees. And it's gotten in the middle of this old, well, not really an old growth forest, but an older forest in Oregon. And it's like chopped through 12,000 acres or something. It's the largest living organism on the planet, the fungus, because it's literally a single organism that grew somehow or another started growing in this forest and has just wiped out millions of trees. And it's a natural function because as that wave of death radiates outward in a gigantic circle, eventually what you'll find is that what used to be forest soil is now been completely reset, and a forest will grow there again. It'll be kind of different, but it just needed to be reset for whatever reason, and I don't pretend to know the mind of nature. But these resets occur, and economics that come from the minds of men is no different than any other ecological system that you will find anywhere in the universe. And the one thing that we were able to do is make sure that it didn't reset. And we've kicked it down the road. And now he's working for Anthropic. I'm not excited about this, as you can tell. And I'm also not excited about the fact that New Hampshire, their council, has rejected the $100 million Bitcoin-backed bond. Bitcoin Magazine, Micah Zimmerman writing, the New Hampshire Executive Council rejected a plan on Wednesday to authorize a $100 million bond backed by Bitcoin, killing a proposal that state officials had cast as a first-in-the-nation bid to draw digital finance to the Granite State. The New Hampshire councilors voted 3-2 against it, according to reporting from the Boston Globe. So, it was close. That last vote could have come down on the other side. It wasn't like a unanimous decision to say, screw Bitcoin. So at least we got that coming out of it. But the New Hampshire Business Finance Authority and Governor Kelly Ayotte had promoted the bond as groundbreaking and historic, and the deal would have stood as the world's first Bitcoin-backed municipal bond. The plan had cleared Moody's ratings and reached the Executive Council for its final vote before issuance. The council didn't share that enthusiasm. Karen Leatt Hill, the lone Democrat, framed her opposition as caution rather than hostility. Quote, "I'm not opposed to Bitcoin or cryptocurrency in general," she told the Boston Globe, "but I do think that we are being asked as a state to lend a kind of legitimacy to a financial transaction, which is from an emerging asset class that has been shown to be very volatile." End quote. James Key Wallace, executive director of the Business Finance Authority, disputed that framing. Quote, "The only quibble I would have is I wouldn't call it emerging," he said. "They have emerged. They're here," end quote. Key Wallace stressed that the bond carried zero risk for New Hampshire taxpayers. The loan agreement would create a conduit between private investors and private borrowers with cryptocurrency as the collateral. The state would owe nothing, even in a Bitcoin crash. Should Bitcoin climb across the 3-year term, the authority could collect millions in fees for small businesses, childcare, housing, and economic development programs. He said the deal could lead to several more. Ayotte, who last year signed a law giving the state treasurer direction to invest in Bitcoin and made New Hampshire the first state to pass a strategic Bitcoin reserve into law, defended the value of moving first. Quote, I think it's something that we really need to think about because our state continues to thrive when we are continuing to be innovative, and especially if we can do so in a way that protects the taxpayers, end quote. Leatt Hill moved to table the proposal, but no colleague seconded the motion, a silence that sent the plan to its final vote. Janet Stevens and David Wheeler joined her in opposition. Joseph Kinney and John Stephen voted in favor of. Key Wallace said his team remains excited about the state's role in the digital asset economy, and he offered to present the idea to the council in the future. Yeah. Whatever. It was, honestly, it was close. And it boiled down to this one person saying, I'm nervous about the volatility. Honestly, it could have been a lot worse. It could have been a 5-0 vote against, and every single person saying Bitcoin is a scam or it's a fraud and it's volatile and X and Y, and it could have been a whole litany of shit, but it wasn't. Honestly, while I'm not particularly pleased here, I am pleased that their reasoning, given what they most likely know about Bitcoin, is reasonable. She literally had a reasonable objection, given what we're pretty sure that she at least knows of, the volatility. I get it. You know, this other guy, this Key Wallace guy, is saying, well, it really wouldn't have mattered to New Hampshire taxpayers, even if the volatility caused a major problem in the Bitcoin price itself. And the upside was we had everything to gain and almost nothing to lose. Well, you know, maybe not. Still, it could have been much, 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 much worse. But we didn't get the New Hampshire Bitcoin bond. You know, better luck next time. On to Japan. Japan's Invest Locally plan likely to spur demand for assets like Bitcoin and gold. All right, this is out of CoinDesk, Omkar Godboll writing. Japanese finance minister, okay, not the prime minister, the finance minister, Satsuki Katayama, said something early Friday that strengthened the long-term bullish case for perceived store of value, limited supply assets like Bitcoin and gold, but not without potential short-term pain. Of course. Katayama said, the government is actively steering the $2 trillion government pension investment fund, the world's largest pension fund, to substantially increase its investments in domestic financial assets, including, you guessed it, government bonds. Her comments come as concern about Japan's above 200% public debt to GDP ratio has lifted its bond yields to 3-decade highs, putting the yen under pressure. The plan aligns with the government's broader objective to rebalance household financial assets away from cash and away from deposits and lead them towards stocks, mutual funds, and bonds. We'll come back to that. This fits squarely into financial historian Russell Napier's prediction that debt-laden nations will resort to national capitalism or state-directed capitalism. That is, the government starts forcing domestic savings institutions to buy its own bonds and other local assets to cap yields and keep them below inflation. Essentially, fixed income returns don't compensate for inflation. This hidden form of tax, first used by nations after World War II, allows authorities to finance deficits cheaply, gradually erode the real value of the debt burden through moderate inflation, and avoid the relatively damaging alternatives of outright default or severe austerity. Such an environment creates a strong incentive to seek assets with limited supply that may preserve purchasing power, such as Bitcoin and gold. Bitcoin has already proved its mettle. Housing prices measured in Bitcoin look far cheaper than in dollars. But there's a near-term risk worth noting. The GPIF holds $931 billion in foreign assets, including $232.1 billion in U.S. treasuries. A slight diversion of capital to local assets may create jitters on Wall Street, potentially breeding risk aversion and selling across all corners of the market, including cryptocurrencies. But for now, however, Bitcoin is buoyant, trading above $64,000, yada, yada, yada. So they're going to talk about price, and we don't need it here because I want to come back to this. The plan aligns with the government's broader objective to rebalance household financial assets away from cash and deposits and toward stocks, mutual funds, and bonds. Yes, if they start buying bonds, it will help control the yield. That's just the way it works. If there's a demand for bond purchasing, you're purchasing the principal, and that has a negative effect on the yield. So the yield of the bonds that you buy start coming down as the bonds come into demand for purchase. If people start selling those bonds, the principal, like let's say the bond costs you $100, you sell it, all of a sudden you sell it for $100, and then the next person that wants to buy a bond is only going to be buying it for like $99 because now there's sell pressure on the bond. But in reaction to that, the yield of the very same bond starts to increase. So here, if people are basically told to buy bonds and maneuvered into buying Japanese government bonds, then the yield will come down, the principal will rise. That's going to be a form of yield curve control, except they're going to basically put it in the hands of retail and mom and pop and plebs on the street. But there's something else here. When they say away from cash and toward mutual funds and bonds and stock, well, that's basically putting a buoyancy on their stock market at the same time. And we're seeing that in the United States with the Trump accounts. It's not cash that's going into your child who happened to be born during this Trump administration. They're not putting $1,000 into that account as cash. They're putting $1,000 in that account that a third party is going to manage into stocks and equities. It's going to basically cause a shit ton of money to be put into the United States stock market. It's not cash. And your kid and you can't manage it. Your kid can't manage it. You can't direct which stocks are bought for it. You can't sell it the kid can't sell it until the kid is 18. So you got 18 years. Because think about it. Any kid born from the day that Trump entered office in 2005 all the way until the date he exits office in 2028 or whatever that's going to end up being, early 2029. That's 4 years. 4 years of every American child born getting $1,000, except it's not actual cash. It's going to be spent into the stock market and managed into the stock market, which is going to do nothing but increase the price of general indices like the S&P, the NASDAQ, and the Dow Jones Industrial. It's an easy way to keep the stock market very, very buoyant. And Japan is going to be doing that as well as getting their regular population to buy bonds. Be very careful. Be very, very careful here, because it sounds to me like a lot of governments are figuring out they're hosed and they need to lean on their populations and their citizenry to get them out of the hole. And if it makes you hungry, well, it's a good thing that we're friends with Sats for Snacks at sats4snacks.com. That's sats4snacks.com. It's my good friend Permanerd who's behind this entire site. You can get freeze-dried pineapple, freeze-dried peaches, freeze-dried organic mangoes, and bananas, and all kinds of freeze-dried stuff. It's not dehydrated. That's the sticking point. It's not dehydrated mangoes. It's freeze-dried organic mangoes. And there's a complete difference in how not only the food tastes, but how it feels in your mouth. Freeze-dried is just, it's a wonderful way to consume dehydrated foods. Well, at least fruit. I'm not sure about freeze-dried meat. I haven't tried any of that yet, but hey, maybe good. But here we're doing freeze-dried fruits. It has a completely different mouthfeel, and the flavor is completely retained. Whereas if you dehydrate banana and get those banana chips, I don't know, man. A, it's kind of like chewing on leather, and B, it doesn't taste as much like a banana as when it was actually fresh. But with freeze drying, yeah, the flavor remains 100% intact. Go to sats4snacks.com, sats4snacks.com. He's in the Circle P. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy those goods and services, but you will buy it in Bitcoin. Because if you're not selling in Bitcoin, you're not in the Circle P. Go to sats4snacks.com. That's sats4snacks.com. Get 2.1% off with coupon code Bitcoin and at sats4snacks.com. Mara, their stock pops as Bitcoin miner agrees to acquire massive powered Texas land plot. So, Decrypt Andrew Hayward is writing this one. Mara Holdings, the publicly traded Bitcoin mining giant, they're deepening its bet that America's power grid, not the cryptocurrency itself, is the real asset worth owning. And its stock is flying Thursday following the announcement. The Miami-based company announced on Thursday that it has struck a deal with HIF USA, a synthetic fuels developer, to acquire a sprawling piece of land in Matagorda County, Texas. That's about 90 miles southwest of Houston. The site, spanning more than 1,200 acres, comes with access to significant electrical grid capacity, up to 1 gigawatt by October 2027, and as much as 2 gigawatts the following spring. Mara plans to turn the property into a compute campus developed alongside Starwood Digital Ventures that could house both AI data centers and the energy-hungry machines that mine Bitcoin. As if AI data centers aren't even more energy-hungry. I don't know where they're going with this. Whatever. It doesn't matter. HIF, which has been eyeing the site for its own fuel production plans, will keep a minority stake once a compute tenant signs the lease, and says it will continue purchasing its other fuel projects elsewhere in Texas, or pursuing its other fuel projects elsewhere in Texas and abroad. Shares in Mara are up more than 15% on the day. The transaction is the latest sign of an unusual convergence reshaping the power industry. Companies once known purely for mining Bitcoin are transforming into infrastructure developers, chasing the same scarce electrons that AI companies desperately need. Mara said the deal, once it's fully built out, would help push its total power portfolio to 4.8 gigawatts, including a previously announced acquisition of an Ohio power plant, a scale that rivals some regional utility companies. Quote, "This transaction advances our strategy of securing strategically located infrastructure assets capable of supporting high-performance compute and Bitcoin workloads," said Mara chairman and CEO Fred Thiel in a statement. Quote, "As demand for digital infrastructure continues to grow, we believe sites with access to reliable, scalable power will become increasingly valuable. This acquisition meaningfully expands our long-term development pipeline and strengthens our ability to support high-performance compute and maximize the value of that power over time, end quote. For Matagorda County, a rural stretch of the Texas Gulf Coast, the promise is more concrete. Thousands of construction and permanent jobs, company officials said, as more than $1.2 billion, it says, has already been invested in the state. So this isn't about AI compute, and it's not about Bitcoin mining. This is about something that is, if you didn't catch it as I was reading it, I'm going to reiterate it here. At this point, the people that have been working for the last 12 years, probably more, in securing power contracts, building data centers for Bitcoin mining, making sure infrastructure is, you've got the transformers, you got the power lines coming in. These guys are experts at high voltage, high wattage, high amperage power systems, whether they're part of the grid or just internally part of their own buildings as it comes off the grid. These guys know everything, all the way back up to the suits that run the show at the utility companies. And here's the play. They're now gunning for those jobs. They're gunning to own the utility companies. That's next. That's the next play. So don't be surprised if in literally within a year. Don't be surprised if you hear a news story with the headline that sounds like this. Mara buys utility grid in Texas. I'm serious. Because we talk about, what's the name of this? ERCOT. ERCOT services most of the Texas grid. The panhandle, around Amarillo and Canyon, Texas, where my good friend Texas Slim is, that's not ERCOT, at least not yet. That's on another grid. But for all the way, even into Lubbock is on ERCOT, and that's in West Texas. So the majority of the state of Texas, that grid is owned and operated by ERCOT. Do not be surprised if you see a consortium or even a single very large Bitcoin miner, possibly even backed in part by somebody like Tether, buy ERCOT. Just buy the whole damn grid. Instead of working with them, they'll now own it. And that won't stop. I'm telling you, man, people were pointing at Bitcoiners and laughing, and now it looks like Bitcoiners may end up taking over the electrical power utilities of the United States. At least that would be the logical conclusion. So, anyway, let's run the numbers. CNBC futures and commodities, and I can tell by the energy numbers that something quote-unquote positive has happened in Iran, because everything's in the red. Brent North Sea is down over a point to 75.48 a barrel. West Texas Intermediate is down 1.5% to 70.97. Natural gas, not a hedge today, down 3.75% to $2.89 per thousand cubic feet. Gasoline fell 2 1/3 to just under $3 a gallon, and Murban crude is down 0.2% to 71.23 a barrel. Metals look to be a little mixed today. Palladium is up 2 percentage points. Gold is down a half. $4,119.08. Platinum is up a quarter. Silver is down 0.7% to $60.32 per ounce, and copper is up a quarter of a point. Ag is fully mixed as well today. Cocoa is the biggest loser, down 7.16%, and the biggest winner is wheat, 4.2% to the upside. Live cattle down a point, lean hogs down a third, and feeder cattle are down 0.75 of a point. S&P is up 0.13%. NASDAQ is moving sideways, slightly in the red. Dow is up 0.2%, and the S&P Mini is down 0.17%. So the equity traders are basically watching what the hell's going on in Iran. And the last that I saw is that somehow or another, Tehran has agreed to talks and the U.S. has paused bombing. And I guess talks are back on the table, even though yesterday and the day before, basically Trump was saying that the talks they can continue, but he's kind of done dealing with them, and I don't exactly know what that means. But as far as the oil traders are concerned, this is positive news because the bottom's falling out of oil market again. I want to be away from all this, which is why I buy Bitcoin and hold Bitcoin, which is at $63,960. That's back to a $128 trillion market cap. And now we can get 15.6 ounces of favorite shiny metal rock with our one Bitcoin, of which there are 20,054,288.64 of. Average fees are high, 0.03 Bitcoin taken in fees on a per block basis. It's about 45 blocks carrying 92,000 unconfirmed transactions waiting to clear at 2 sats per VByte. Low priority will get you in at 0.6. And we have fallen below 900 exahashes per second. We're all going to die. 891 exahashes per second is the security on the Bitcoin network, and everything was just fine when it was 175. So if you hear people out there screaming about the mining death cycle or death spiral, just mute them or mute the word mining death spiral. It's not worth your time. Reminder to go to bitcoinandshow.com. You can sign up for if you want to support the show. I've got a tier that's a paid tier. You can get it for free. You give me your email. I will not give your email to anybody else. When I make a post, you'll get it right into your inbox. And generally speaking, those posts are very condensed verbal or rather written versions of the show that I would have done earlier that day. I don't do it every day, but sometimes I do. There's a little bit of artwork involved. And again, I do not give your email to anyone. And if you want to support the show, you can get a paid tier, $5 a month, or if you want to pay for the whole year up front, it's $50 for the year. And what does it get you? Well, it let me know that I'm giving you value by doing this show, by you returning that value in the form of, in this case, fiat currency, because turns out it's still kind of hard to plug in to Ghost anyway, or to get a plug-in that I don't have to really, because I'm a one-man show. So anything that I add, I have to manage. If I don't have to add it, I don't have to manage it. But here's the deal. Since it's connected to Stripe, if you pay $50, it's connected to Stripe, it goes directly to my Strike account where it's automatically converted into Bitcoin without me doing a damn thing. So even though you may be paying me in fiat, it's getting converted to Bitcoin within seconds. Or at least whenever Stripe sends it to Strike, it gets converted into Bitcoin. So if you want to support the show, bitcoinandshow.com. From Micah Drop, yesterday's episode of Bitcoin and Jay gave me, 21,000 sats. Thank you, sir. He says, I hope you enjoyed your vacation. Welcome back. And thank you, sir. No, thank you. And I did enjoy my vacation. And one of these days, I really want to just move to Southwest Colorado. It's not because I'm in love with the politics of Colorado. I don't give a shit. Where Southwest Colorado is very rural. There's not a whole lot of bullshit going on. Lots of ranching, lots of farming, lots of people that I can wrap my head around. And it's beautiful. And there's something about the San Juan Mountains that I just dream about them all the time. And I really want to be able to get back there. I would love to permanently be doing the show from San Juan Mountains, Colorado. Cycros with 580 says, welcome back. Yeah, I appreciate that, sir. Nick Dose with 240 says, cheers, and right back at you. And Nick Dose with 101 sats says, thanks. No, thank you. That's the weather report. Welcome to part two of the news that you can use. EU Parliament passes chat control, allowing private chat to be screened until the year 2028. This is out of Cointelegraph. Jesse Coughlin writes, the European Parliament has passed legislation that allows tech firms to scan messages for child sexual abuse material until 2028, a controversial law dubbed chat control by critics. The lawmakers on Thursday largely voted against extending the regulation, which is dubbed Chat Control 1.0, but stopping it required 361 lawmakers to reject it. But only 314 voted to stop the law, and 276 supported it. I got to pause right there to say what happened here. If they don't say it later, this is what's going on. In the EU Parliament, if you're not there to vote, then your vote is automatically counted as yes. Even though you weren't there and you didn't cast a vote, you still actually vote, and it's an automatic yes no matter what the legislation is. Seems odd, does it not? And if you're a European listening to me, you need to be very, very wary of the people there if you aren't already. And I think if you're a regular person in Europe, you're probably very wary of what the hell goes on in Brussels. Anyway, the vote advances reviving the chat control rule that expired in April and has been a controversial topic among privacy and cryptography advocates. Parliament, however, passed an exemption to exclude communications to which end-to-end encryption is, has been, or will be applied, handing a small win to cypherpunks. Pirate Party MEP Marketa Gregorova, can't pronounce any of these names, whose party put forward the amendment to exempt end-to-end encrypted messages, said its success was a bittersweet victory. Quote, protecting encryption was one of our priorities, and I am therefore glad that we managed to secure an absolute majority for an amendment that at least preserves encryption. At the same time, however, voluntary mass scanning unfortunately passed. The law's supporters argue it is vital to protect the children and combat the spread of abusive material. The Parliament's laws with amendments will be sent back to the Council of the EU, a body of ministers from the bloc's members nation who will approve or reject the legislation. The vote on Thursday comes after the European Parliament voted through a rarely used urgent procedure on Tuesday that brought lawmakers back to vote on whether to extend the framework for the laws that expired in April. Since the framework expired, messaging platforms such as WhatsApp have been allowed to take their own voluntary measures to seek out those sharing abusive material. In March, Parliament rejected a temporary extension of the regulation, while a permanent version of the law, dubbed Chat Control 2.0, was under discussion. The European People's Party, the largest group in Parliament, revived the extension in the urgent procedural vote on Tuesday. The party had largely voted against extending the laws back in March because of amendments that restricted the scope of scans, but its leader, Manfred Weber, has been looking for ways to push through the extension without changes. Breyer, the former MEP, said the political battle over the permanent Chat Control 2.0 is just getting started. Quote, the resistance we saw in Parliament today was so strong that finding a majority for permanent, suspicionless mass scanning in future negotiations is a complete pipe dream. He said negotiations for the permanent law, or Chat Control 2.0, will resume in September, with lawmakers disputing whether message scanning should be targeted or applied broadly. You guys are hosed. You guys are hosed. Because all that has to happen, I guess, is enough people need to sit out the vote and not actually say they abstain, and they will automatically vote yes for everything. So that presumes that every bill that passes into a vote situation in the European Parliament, the very worst case is what is presented. so that if you're not there, you automatically vote for it. If you can leave Europe, I know, I get it. It's not just that it's hard to move, especially if you're going to change your nationality. I get it. I really do. But it's harder than that, because if you were born in France, you're French. That's your nationality. You probably have some sort of national pride in being French. You love being French. That's okay. I love being an American. I'm not happy with our federal government, but other than that, I love being an American. A Mexican should love being a Mexican. An Argentinian, I guess is what you would call it, should love being from, being born in, living in, and absolutely adoring Argentina. There's nothing wrong with that. And it does make it hard to leave your country of origin, your country of birth, because you don't want to leave it. So there's only one other option, and that's full-scale fucking civil war. And I'm talking of the violent nature, not the walking around in a circle holding a goddamn sign. I'm talking about actual blood, actual loss of life, and nobody really wants that because, well, we shouldn't have to be here. There shouldn't have to be violence to stop these insane people from trotting all up and down your ass. And it's happening to us in the United States, not to the extent as the EU, but, that may not last. It's happening in Mexico. It's happening in China. Well, it's been happening in China forever. You get it, right? This has nothing to do with the country of origin. It's our fault. It's the citizens' fault for being so fucking apathetic for so fucking long that we've let psychopaths and sociopaths basically breed unhinged like bunnies. And they are populating every niche of power they possibly can. And it's too late to march around in a circle holding a sign that says something we want. When do we want it? That bullshit. That's not going to work. The protesting, forget it. It's not going to work. There's only one thing left on the table, and nobody that has any good conscience or any humanity left in them at all wants. And I've already said what it was. I'm not going to have to say it again. I hate that we're here. I really do. None of us wanted this. But I fear that it's going to end up a really bloody mess. Not today and not tomorrow, but probably sooner than we want and sooner than we think. Okay, Japanese lender launches Bitcoin-backed loans of up to $6.2 million. That's a lot of money. Ezra Reguera, Cointelegraph. Japanese lender Cyril, C-R-Y-L, has launched Bitcoin-backed loans of 6.2 million USD, allowing individuals and businesses to raise fiat currency without selling their Bitcoin. On Thursday, the company announced that borrowers can access between $6,200 and $6.2 million at an annual rate of 3.5 to 7%. Actually, not terrible. The loans carry collateral ratios of 40 to 60%. They run for 1 year and can be used for expenses including taxes, business funding, and property purchasing. The launch expands Japan's small market for regulated crypto backed financing. In 2020, FinTech, a Daiwa Securities Group and Credit Suisse joint venture, joined a similar service and currently lends up to $3 million against Bitcoin and shitcoin number one. However, Cyril's service advertises a higher ceiling and a lower minimum while limiting collateral just to Bitcoin. Cyril framed the service as adding a third option beyond holding or selling their crypto. However, applicants must undergo screening, and most loans use a lump sum repayment structure with principal and interest due after 1 year. FinTech's product shows that Bitcoin-backed lending has been available in Japan for several years. The company's website currently lists loans for individuals and businesses with annual rates of 4 to 8% and a 50% collateral ratio and a minimum borrowing amount of 5 million yen or $31,000. The service also gained a wider distribution channel in October when Daiwa Securities began introducing customers at its branches across Japan to FinTech's digital asset-backed loans. FinTech is owned 80% by Daiwa. Other Japanese companies are also exploring how Bitcoin could support more complex credit products. On Friday, Metaplanet Securities, yen stablecoin issuer JPYC, and tokenization infrastructure provider Progmat announced a study into using Bitcoin as collateral or credit enhancement for digital corporate bonds and other blockchain-based credit instrumentation. Unlike the loan products offered by Cyril and FinTech, the Metaplanet initiative remains at the research phase, and the company said no issuance has been decided. So there's some fairly large loan instruments going on in Japan as well. I hope they aren't abused. Last story of the day, OpenAI releases ChatGPT 5.6 Sol, S-O-L. Here's how it stacks up against other AI models. This is Jose Antonio Lanz writing for Decrypt. OpenAI's GPT 5.6 Sol is now public. The company released its new flagship model to general users today, launching alongside two smaller siblings, Terra and Luna. Oh, God, please no. After the U.S. Department of Commerce kept a preview restricted to about 20 trusted partners for 2 weeks. The naming strategy is new for OpenAI. This is the first time the company gives names to its models instead of simply using numbers. Sol, Terra, and Luna mark capability tiers that can move on their own cadence. Sol is the flagship. Terra is the everyday model OpenAI says matches GPT 5.5 at half the price, and Luna is the cheaper option. Pricing runs $5 to $30 per million input and output tokens for Sol, dropping to $1 and $6 for Luna. 2 new knobs ship with it, a max reasoning effort that lets Sol think longer, and an ultra mode that farms work out to sub-agents. Interesting. For context, Anthropic charges $10 to $50 for Claude Fable 5, Google charges $2 to $12 for Gemini 3.1 Pro, and XAI charges $15 to $75 for Grok 4.5. Now on the Chinese side, DeepSeek charges $1.74 to $3.48 for version 4 Pro, and Xiaomi charges just $1 to $5 for Mimo version 2.5 Pro, placing Sol between the premium US frontier model and China's lowest cost challengers. On Terminal Bench 2.1, a test of command line workflows that reward planning, tool use, and iteration scored as the share of task a model completes, Sol in its Ultra configuration hit 91.9%, with standard Sol at 88.8%. And that puts both ahead of Anthropic's Claude Mythos 5 at 88%, Claude Fable 5 at 84.3%, and Claude Opus 4.8 at 78.9%, while Google Gemini 3.1 Pro trailed the chart at 70.7%. OpenAI leaned hardest on cyber. On Exploit Bench, which measures just how well a model finds and weaponizes software vulnerabilities, Sol matched the restricted Mythos preview while spending roughly a third of the tokens. OpenAI says Sol doesn't cross the cyber-critical line in its own risk framework. Early access was loud. Theo, a well-known developer, AI YouTuber, and CEO of the AI platform T3 Chat, called Sol, quote, world leading in computer use, and said it fixed the complaints that he had with GPT 5.5. Dan Shipper, whose team at Every tested it for a month, offered a cleaner line. He says, quote, GPT 5.6 is like a Porsche. Fable is like a warp drive. His read is that Sol is the daily driver and Fable is the thing you reach for to cross a galaxy. That makes sense, I suppose. Leaks already point past it. One roadmap tracking account, Synthwave on X, claims GPT 5.6 is the last of the 5.x line, with GPT 6 built on a larger base arriving within about a month. The same thread pegs Anthropic's Fable 5.1 is close and DeepSeek's version 4 general release as imminent. The timing is pointed. Sol arrives the same week Anthropic's Fable 5 drops out of subscription plans after it returned globally on July the 1st. The model moved to usage credits only once its 50% weekly allowance expired on July the 7th. It's crowded at the top, though. SpaceX AI shipped Grok 4.5 yesterday at a fraction of the price, which Elon Musk called roughly comparable to Opus 4.7, but a lot faster. Meta released Muse Spark 1.1 this morning. That's its first paid model. Neither leads the pack, but both are frontier class. That leaves Google as the one big U.S. lab that hasn't refreshed its flagship in this particular run. Its top model, Gemini 3, has been out since November 2025. The oldest frontier release still standing, while OpenAI, Anthropic, xAI, and Meta all moved in the exact same 7-day time span. Yeah, it's kind of interesting that they all moved together, is it not? And so I was playing around with GPT 5.6 today. I don't really have much to say about it other than it's, you know, some of the same stuff that I was doing with 5.5. It's fast and it gives me about the same quality, but it is fast. Now, I've only done a couple of runs, so I can't really, say, hey, this is great. I don't know yet, but it looks promising. I'll say that. That's the end of today's episode of Bitcoin and with me, your host, David Bennett. I will be back on Monday, although you never know. I might drop something this weekend if I have time to record it. Not exactly sure about that, but I do appreciate you listening. And if you got any value out of the episode, go to Bitcoin and Show and, give me sign up for a $5 a month subscription or throw down $50 for no other reason than to say you found value or you continuously find value in this show. Because if you do, and you can give me some of that value back in another format, I promise you I will do the best I can with the funds that you give me. That's all I can say. If I can get more people to fund the show instead of having to go out and eventually end up trying to hit sponsors, which I know nobody likes it when, Bitcoin podcasters get sponsors. We always get shit about it. But, if you don't want it to happen here and you want me to be able to go do things like actually be able to go on the road and talk to ranchers and do the things like spend the amount of time that it would take to actually do that. And so that you can get behind, what do ranchers think about the economy? I'm not talking about how to castrate a bull. I want to know what different people in some of these more rural castings of employment, what do they see? Not only in their industry, what do they see about the global legacy economics and how it's fitting in with what they do? How has it screwed them over? And then I want to find out, what do they think about Bitcoin? Whether they hate it or love it. But I can only do that on their turf, which means I got to throw a mobile recording studio into a car I gotta do all the stuff that finds these people, that make the agreement that says, yes, you can come out, you can spend a couple of days out here getting to know the operation, getting to know us, so that you'll have a better time on the interview. If you want that to happen, and God knows I want that to happen, I need gas money. I need lunch money. I need fundage. I need to be able to stay in a hotel. I need to be able to do all that shit. And all of that shit costs money. So if you want that to happen, if you would like to see that actually occur, go to Bitcoin and Show and dump some money. You buy an annual subscription, and let's see what we can do together. And I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.